Hello there, this is fairbinaryoptions.com, and it is the 30th of September. We're looking at some markets here that are going to be influenced by end of month flows today, and one of them is going to be, of course, the US dollar and Canadian dollar. Now, it is important because, like on any end of month, we'll have the Canadian GDP to be released, and I would say that is going to surprise to the upside, and the first reaction or the initial reaction is going to be on the downside on the US dollar and Canadian dollar. Now, we have here an interesting situation, and I would like to present it to you with the let's say saying that it is resembling on the bigger picture a running variation of a contracting triangle. And we have here what? We have here one high, as you can see, or the last high. Then we have a lower high, and now the market has problems into breaking that lower high or that second lower high, and that means that we should look for a move to the downside. And I would like to buy actually put options on the US dollar Canadian dollar on this moment here, and then I would like to buy call options from around 1.11, something like this. I would like to buy call options, and the trading plan to come from the bigger time frame. Let me show you the 4-hour chart, for example, and then zoom out a bit like this. Now, from my point of view, the whole move that this market is forming here, let me zoom in like this, from here to here, so from here to here is nothing but a triangle, is nothing but a running variation of a contracting triangle, and it goes with the following shape. It goes with this being wave A, then the B wave, then the C wave probably here, then the D wave, and we need an E wave, something like this or something like this. So the first reaction or the first thing to consider will be a so-called E wave here. So we're looking for the E wave to come, and this would be definitely below 111 in order to have overlapping between the D, so A, B, C, D, E, between the B wave and the E wave, and that overlapping normally again should go below, I repeat, below 1.11. So the triangle, or this triangle, should travel between the B and D and A and C trend lines like any other triangle actually, so from here to here. But the only thing is that even though it is pointing to the upside, it should break, and even though it is looking like a rising wedge, it should break still to the upside. As you can see, it is contracting. Probably this will be the end of the D wave. It is contracting, and it has a big thrust or measure move. This one comes 161.8 when compared with the longest wave. 161.8 that we should place by the time here. So by the time this is going to from here to here, so by the time that the E wave is done, we should go and look for 161.8, and this means something like 1.15 if the market retraces below 111. So all in all, the trading plan for the US dollar and Canadian dollar is the following. I would like to go and buy call options, so buying put options right here at 111.57, 111.57 with end of day expiration date first of all, and then looking to buy call options on any dip below 1.11, so basically 1.11, 1.1080 area. And for this one, we want end of week expiration date. Thank you very much for being here. A classical running variation of a contracting triangle for the US dollar and Canadian dollar. I would say that these markets are looking quite good. Thank you, and bye bye.